The BNZ achieved disciplined home lending growth last year, but with 90% of mortgages on fixed terms, there is pain to come. CEO Dan Huggins joins me. And Dan, you've got something like 88% or so of mortgage lending are on fixed terms, so that's going to start rolling off. What's that going to mean?
Well, we have about 40% of our customers who have already rolled off onto new rates. We have about another 30% who in the next 12 months or so will roll off those very low rates onto new rates. And many of them can afford that. We're seeing customers can afford those new rates, but where customers are finding it hard, we'd really encourage them to call us so that we can help.
Yeah, you have flagged in your statement today, haven't you, that you're expecting times to get a bit tougher for New Zealanders. How serious could that be?
Well, certainly we're going through a difficult period of economic adjustment. We're seeing those interest rates come through for businesses. They've got a range of challenges from global geopolitical challenges to labour supply. So, we expect that, it'll be a period of adjustment, which the economy will need to go through.
Now, of course, your sector's come under fire a bit from the PM this week. She says you're making excessive profits and you're risking your social licence to operate. How do you respond to that?
Look, I think we can all agree that a strong and stable banking system is really good for New Zealand. It's important for New Zealand. I think the conversation about what the BNZ's doing, what banks are doing, and what all businesses are doing to support New Zealand through a challenging period is really important. And focusing on that social licence is something we do every day. How can we serve customers well? How can we support New Zealand? So, it's a core of what we do and how we operate the bank.
Well, the Greens are saying that's like putting the fox in charge of the hen house, expecting banks to look after people. And they're talking about whether we should bring in a windfall tax to companies, not just banks, that are making good profits in bad times. How would you respond to that one?
Well, look, it's a very large industry, and I think that's what is often hard for people to comprehend when they see large profits. It's hard to comprehend just how big the industry, the banking industry, is $600 billion. It's 3 times bigger than the capitalisation of the NZX. So you would expect for an industry of that size to see, large profits. At the same time, the industry is incredibly competitive. There's 30 different banks and building unions and building societies. So, we see that competition, which gives good choice for consumers and delivers good outcomes.
Nevertheless, at the moment, you are making quite good margins. Your net interest margins are 2.57, up from 2.29 this time last year. Can you see that continuing to widen, or will times get tougher for you as next year comes?
Yeah, the numbers you're quoting are our Australian New Zealand banking numbers. That excludes a number of functions like our prudential book and also our markets business. So when we look at the New Zealand entity, including those things, our margin is about 215 basis points. It's increased 13 basis points in the last year. That increase is due to a range of factors: the balance sheet shape, interest rates, and we expect that as things change, as balance sheets keep changing, that NIM will also move around.
One area you've done pretty well in, of course, in the last 12 months, though, is business lending. You've actually seen 6% growth in that. You are a bit stronger in the business lending than some of the other banks. But what do you put that down to?
Look, we are a strong business bank. We've got great relationship bankers and we've proudly supported 16,500 small and medium-sized businesses over the past year. So, we think that proposition's attractive. We've shown to businesses that we're willing to support them through the good times and the bad times, and we'll continue to do that.
What do you see the outlook for business being like in the next 12 months?
Look, it's going to be challenging. The economic environment is challenging, and there's a range of factors that businesses will need to deal with. Rising interest rates, labour. When I talk to businesses, labour supply is a big issue. So, businesses will need to evolve their business models and respond to that. We see businesses doing that every single day, but it'll be a challenging period of adjustment for New Zealanders and New Zealand business.
Your Australian parent has described you as having a disciplined mortgage lending growth. And of course, we have been facing challenges like the triple CFA regulations here in the New Zealand market. How do you see the housing market going in the next year?
I mean, the housing market is certainly down off its peaks. We've said for some time we expect that that will see a sort of 15 to 20% adjustment in those prices. We're well on the way to that. But again, we continue to lend to New Zealanders and take a disciplined approach to that to make sure that customers can afford their loans over time.
Dan Huggins of BNZ, thanks for joining us.
No problem. Thanks for having me.